afternoon, everybody. This is Mark. We're back here for the daily recap. It is Tuesday, Thanksgiving week. We know it's slowing down. We know we had a big travel range from Friday to today. This down day that we had, which really was, in my opinion, quite muted, was pretty impressive, much to be expected. And I think, it's buyable on pullbacks at this point in time until it's not. We're hanging above the 200-day moving average on the spiders, which is a good sign. On the Qs, we're not quite above the 200-day, but I think that's the next level of resistance, which again, we're still about 50, 80 cents above the, to that point. So 64.50 roughly will be that resistance. And then on the IWMs, we're a little closer, but we still have about 60, 80 cents to get up to on the Russell. Overall, guys, is it a one-day wonder or a 1.5, 2-day wonder? What happened from Friday to Monday? Not sure. I don't think you could just say blindly buy and blindly sell, but I think you got to be strategic and you got to really pick your spots, and that's what I'm been doing and what I'm talking about, and is what you have to do. You got to do your homework, you got to get your conviction, and you got to trust the levels that these stocks are hitting. Let's bring up Apple because it's really quite frankly been the only stock that I feel like there's any juice in with this tape at all. There's little picks, piecemeal stocks that we can look at, but Apple obviously gave you a tremendous move from Friday to today and hit I believe it was the 50-day moving average and came back down. Maybe it was the 200-day, not the 200. It's showing a 200-day here. I have it a little higher, but hit a key moving average, sold off hard, so gave you nice two-way action today. And I'll just put up the 13-minute chart just so you can see. There were some nice longs in the AM above 470. Pre-market was 461, 462. Went all the way to, or 465, I'm sorry, 565. Went all the way to 572, came back in, went all the way to 554.50, which basically was the breakout from the previous level on the daily chart. Viable, and closed the day roughly at 560, 561. So it gave you lots of two-way action. I think that's healthy. I expect that to be the case, and it just to create new trading ranges for the stock. Probably 550, 554 to 575 will be the trading range, and you got to trade it accordingly. Other high betas, Amazon had a decent day today. There's not a whole lot of volume in this tape, so it really is hard to keep adding to winning positions. Quite frankly, I'm taking off into the winners at this point in time. Versus where if there's volume attached to some of these moves, I would definitely be getting involved a little heavier at certain levels. But the volume's too light. It's a holiday week. I think you got to be smart and you got to be prudent with what's happening. So we have Amazon, Google, same thing. Had a decent day today, then really just petered out. Price line breaking a little bit of a ascending channel. I think that Scott, based on what I'm seeing, that's our descending channel that Scott drew this morning. Closed above there, 535. 635, 640 roughly would be a trigger long for a continued up move. We'll have to see if it has some follow through into the week. Looks okay. Gold, Bernanke spoke today. Gold got hit a little bit, but I think it's just trying to find a new level. 1700 still is resistance. 169 roughly is resistance in the ETF. Not a whole lot to talk about, but it's something that necessarily you have to keep on the radar. Bernanke spoke today, and basically, he just reiterated that if the fiscal cliff happened, he's not supporting it with, Fed funds, and that's just, obviously puts a gun to the, government's head to see if they can get this done. We'll have to wait and see. Obviously, it has to happen by the end of the new year, or by the end of the year. Other stocks, home builders, the home builder index, same store, like the home building number was pretty good. They're trying to recover after a little bit of a pullback. This is one of the strongest industries. Some of them I have total up, touched its 200-day, bounced. XHB, almost very similar. Didn't get quite to its 200-day, got to almost to its 100-day. It's bounced, still trading in the top third of its trading range. Still very productive, still looks good across the board. Biotechs today seem to be on the move. One of the best in breed. Unbelievable move. REGN. Some other noteworthy ones. GILD. Good looking chart, something to keep on the radar. A few things that was trading today, I got out of it, but they look good. ALXN, PCYC is another one that's on the radar, but nothing has triggered yet. And then if you want to go with the big boy, you look at Amgen, which again, nice consolidation, possibly waking up a little bit. Overall, guys, I'm in the mode where it's holiday week. I'm taking things light. I've been very Apple-centric, which is a little unusual for me. I like to really spread myself out in different positions. I don't think we're in that tape yet. I don't think there's a green light across the board. I think, quite frankly, you got to be a little cautious. You have to be specific with your prices and your ideas, and that's how you're going to get paid on the long or short side. I'm not even going to give an opinion on, do I think we go higher, do I think we go lower? I think we're creating a new range, and I do believe a higher low will be put in over the next few days or few weeks, and I do believe the low is in for the end of the year. That's my opinion. It can change based on technicals, based on gyrations that I see. We'll have to wait and see. We've come a long way, so I would expect some backing and filling to happen. In that backing and filling, little pullbacks are probably going to be buyable. That's what I'm looking for. Obviously, I lean towards the long side a little bit, but for the better part of a few weeks, I've been just avoiding this market, getting a little short, and quite frankly, waiting for my time. We get the end of the year, we possibly get the Santa Claus rally that I think people are either waiting for or looking for. Retailers might remain strong or get stronger. So it's something that we have to keep on the radar and let the charts tell you. If we don't have volume attached to any of these moves, you got to be obviously skeptical. It just means you can't really get aggressive into the way up or the way down, depending on whether you're long or short. That's where we're at, guys. So hopefully you took advantage of some of the moves today. There's going to be some moves tomorrow. I think Friday's going to be extremely slow, but I think we're going to have some trades in the morning for us to take advantage of. Good luck today. Hopefully you had a good day today, and I'll see you all tomorrow.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.